Welcome, traders. Adam here, Chief Market Analyst. So first of all, in case I didn't say it last week, Happy New Year, all the best, wishing all of you all the best in 2025. There's just so much I think I anticipate. I think as you all do, this is going to be an eventful year. So just having a quick look at the economic calendar. So first of all, currently the US economy is looking pretty good. Okay, there's no real red flags at this time, or at least nothing nothing that I believe requires that we need to start monitoring anything just yet. As soon as I feel that there's any kind of tremors, I will start to look at jobless claims and CPI and a few other things, but that may not be the case for several months. Let's see how that goes. So most of my focus is going to be on how is the UK, how is the EU doing? We've got some CPI data and we've got GDP for the UK. I'd like to see how that is on Thursday later in the week. And we've got CPI data for Europe, for the Eurozone, coming out on Friday. So really most of my focus will be on that at this point. And then of course Monday is a Japanese national holiday. So I expect volume to be slightly lower on Monday, and then otherwise picking up. And we're post NFP now, post non-farm jobs numbers, and of course, as has been the case for the last few years, jobs numbers exceeded expectations. Unemployment claims dropped. So the U.S. economy is doing just fine, and I feel like checking in on that every week is a little bit pointless at this time. Really, I need to we'll have a look and see how other countries and other areas are doing. So just before I move on to the charts, I often get a lot of people asking me about the dollar index. So the dollar index is a standalone index that monitors the performance of the US dollar against a basket of other currencies. And currently, or at least taking this grab from babypips.com, credit to them for the image, we've got the euro making up approximately 60% of that. We've got followed up by Japanese yen, and then of course the pound, Canadian dollar, Swedish krona, and the Swiss franc. So, all right, so we basically essentially got 6 other currencies against the US dollar and really monitoring that. So when I look at the dollar index, which I'm going to do when I go to the chart now, what I'm then doing is looking at the performance of the dollar in isolation. It's a very good indication once you understand that the dollar is the biggest cog in the system, and I need to get a sense of how the dollar is performing. This is usually the way to do it. So first of all, I want to just go back a little bit. Let's have a look at the VIX. You can see here volatility rising slightly, not really at any levels that I would consider concerning, and just wanted to show you that for the most part still operating at relative lows. But I will say this, kind of going back from October, you can see that there is a little bit more volatility in the average candle here, not this given spike that we had in August, but this sort of area here, I'm noticing more candles and more activity here. So I'm not going to be too surprised if we start to see this slowly and steadily rise, but right now it's still operating within a range. All right, moving on to the US dollar index. Okay, so as I've been talking about for a couple of months, certainly going back to September, the dollar has had a particularly strong run of late. When we look at it from a monthly perspective, it has broken out of a range which it's been in for a while, going back to 2022, and it clearly is free and clear of this range at this time, and it looks as though it's essentially just heading up to the next key level. When we have a look at it from a weekly perspective, we've had a big run and then a shallow pullback and a continuation up. Now, what I find interesting is that last week's candle is close to being an engulfing candle, but the market really didn't move much beyond the previous week's range. So one of the things that I've been talking about quite a bit is that it's unusual to have a very long extended run in any market. So that is the basis for a bubble, is when you see gold running, twice as far as it normally does without taking a correction, when you see the dollar running twice as far as it normally does. So although it broke out, I don't really have an issue with that. It's the fact that it just did a straight up run with a very small little bit of a pullback and then just continued straight without any kind of a retest of the outside of that range. So to me, there is no doubt that the dollar is on an extended run, and it's unusual. It's not very rare, but it's rare enough that to me, it signifies that I'm not really sure why at this time the dollar is on an extended run, because it's been this way going back to September. So it doesn't really, there's nothing that I can identify out there that would explain this other than the fact that, yes, the dollar is strengthening. Sorry, sneezed there at the end. And so This is a particularly strong run, and it's unusual. And by now, I would have expected actually a much deeper correction. The weekly is really where I would have expected it. But you know what? The fact is that it is continuing to strengthen. It is heading up towards 110. So this is a big move. It's gone from 100 to 110 without really a decent retracement, and that is a significantly big move in any at any time period. So one of the things I'm going to be again I've been looking for a while is to see if we get any kind of a correction. We've got some bearish divergence here. The price action is starting to show signs of exhaustion. And again, this week, I'm going to be looking to see if there's a bit of a correction. So when I move across to the majors as well, you can see that that trend has been very strong. It keeps going. We've got a little bit of bullish divergence there. You can see more and more wicks coming in here. And actually, I was talking about this kind of going back to November, and it's continued to push lower and lower. The euro dollar has also broken out of its range and is starting to approach sort of the next low. So we've got that very strong dollar. We've got euro. We've got them, I don't want to say historically, but they haven't been this weak against the US dollar in quite a while. When we look at sterling as well, look at that very strong weekly bearish, almost engulfing candle, but very strong closing almost near the low. So that's quite a strong finish to the downside. So this uptrend that we were seeing on the monthly here with cable getting above the 50-period moving average, all of its moving averages breaking up to that has just been given back completely. And that's driven largely by the dollar. So then we go ahead and have a look at dollar yen. So dollar yen not moving as much. And so we know that the Bank of Japan is really trying to curb it. And what I find interesting, just to show you back, sort of show you euro and GBP, Friday showed a break of the low. So NFP came out, strong numbers, good for the dollar in theory. We see price came down, push back up above these levels. And this is really what I'm going to be looking for this week, is to see if we get another push back up to the upside here. But we had a really kind of a strong, solid trend continuation to the downside. We look at cable, very much a finish right down near the lows. Very similar for Aussie dollar, US dollar as well, Kiwi dollar, US dollar. But when we go to dollar yen, where I would have expected a very strong push to the upside, we don't. We can see that it's slowing down a little bit. We've got the MACD starting to flatten out. We've got price action starting to fail. So there's definitely a level of resistance, which I think we can call it here at 157.90. If you want to call it 158. So let's just go ahead and just copy that and put it in, at that level. Okay, so there we go. We've got some resistance there, and that's what I'm going to be looking for this week. Do we get that start of that failure and potentially starting to look for fresh lows by the end of the week? Dollar Swissy did follow through on that. So that is obviously generally inversely correlated with the euro dollar these days. So we had a very nice pullback, trend continuation coming up to significant level 0.92. And also here you can see it's at a straight run up. So again, dollar Swissy having performed a very shallow low, but this looking very similar in many ways to that dollar index. Now, dollar CAD is the one to me that is also worth mentioning. So here we can see price actually coming back up to these highs. I've highlighted this area sort of in orange. We've got what most people would refer to as a hanging man. So hanging man tends to occur, this is a candlestick pattern, tends to occur at the end of a long run. And that's often a sign of potential exhaustion in a move. So what's important here to note is that dollar CAD was one of the first majors to break out of its range against the dollar. It even did that before the dollar itself broke out of its own range, broke out and looks pretty good, pretty much on its way out. At some point, it would be nice to see it come back and test this. Doesn't have to do that, but that is a relatively standard thing for it to do. What I find interesting, again, on Friday also finished up a little bit higher, but not as much as I would have expected. Not like dollar Swissy moving right up. So we've got some signs of exhaustion here, which I haven't seen in a while. We've got clear sort of bearish. We can see that our momentum has turned bearish. And so it's going to be interesting to me to see this week what happens. And certainly what I think that we are due for is at the very least, is a weekly or monthly correction, which would be somewhere to the 382 or 50 fib percentile retracement. And so dollar CAD, one more reason I wanted to bring this up is that the move from the lows to the highs is almost 1,000 pips without any, so much as the smallest retracement, which is a very unusual move, and supported, obviously pushed largely by the dollar and the weak Canadian dollar as well. But that again just adds to the fact that the majors at the moment are being pushed beyond their normal behavior. And so that means one of two things, which is annoying because it means basically the opposite. It means we could see continued unpredictable behavior because they've been unpredictable so far. Or the fact is that at the same time, the further they go, obviously, the more likely they are to have a correction. But this is the first time where I'm really starting to see signs of it in some of the other pairs, not just Euro and GBP. GBP was actually managing to stay up quite a bit and then just collapse through on that one. So it was doing relatively well here, and then just this last week just fell right through. Whereas I'm also seeing the fact that euro dollar is really trying to resist creating new lows. We could see here. So what I'm looking for at the moment, we're seeing deeper retracements. I'm seeing that bullish divergence keeps continuing. And really looking now, I'm looking to see if we get a very bullish weekly candle, which would be a sign that we're going to get a deeper retracement. But there's no doubt that that dollar is very strong. Right, let's move on. Because what changed again was that although we had that continuation of that strong US dollar this week, there were a couple of things that produced slightly different results. So first of all, gold here has actually attempted and managed, I would say successfully, to breach the downward sloping trend line. So it's attempting to break out of this wedge. It hasn't broken above these highs here. So it is still operating largely within these previous large candles over here. And you can see from a monthly perspective, I still consider it overextended, but it looks very keen to attempt to keep going. And this is yet another instrument that is operating beyond its normal type of behavior. It's exactly the same. It has also had an extended run without a pullback. This is the longest run I've seen personally since its bubble in 2011. Crude oil also broke its behavior. Very strong day yesterday, broke to the upside. I've been talking about this one for months, broke to the upside, and I think there's no denying it now. It's broken through that downward sloping trend line. It's broken to the upside here, which means that this pattern that's been building up for a couple of years now is at this time pretty much negated. And so I'm going to be looking for this week is potentially a slight pullback and a continuation to the upside there. Really, we've got to come into these highs at about the $80 mark, and that could provide some resistance. But shorter term, I think there's some good opportunities for potential long opportunities to the upside there. So waiting for any kind of a pullback towards the back down towards the moving averages and then a continuation. So there we go. We can get rid of that. We finally got some clarification on crude oil. Now moving on to the indices, we also saw a change here. So basically, let me recap where we are so far. The majors, the dollar index, the majors actually appeared mostly to continue the trends that they've been in since September. However, gold, crude oil have changed, deviated from the patterns they've been in since then, and the indices have also changed. Okay, so we definitely are under different conditions this week than we have been for several months. And let's have a look. So one of the things that happened, very significant, I would say, is that we have broken through major support, closed right down below that. You can see the weekly now starting to break below these previous lows. So the uptrend on the weekly is done. All right, it's now effectively broken. The question then leads us to, is this now a monthly retracement? Which it certainly is. The question just really then becomes, how far is this retracement? So I'm going to be looking for some nice bullish candles to form in this area over the coming weeks. I'm going to call it that, not even months. Potentially over the weeks, we could see a follow through this week. I believe there might be a point where we get an acceleration to the downside, but we might also recover from that relatively quickly. So I'm looking to see if that's going to be the case this coming week. Cautiously bearish. This is very important. I'm not at this time expecting a much bigger correction. I'm expecting certainly a monthly correction, but distance-wise, it isn't necessarily going to be a big one. So the S&P here also not that far to come down from where it is now at 5866 to come back down towards 55 potentially, which would, I would say, constitutes a very healthy pullback on the monthly time frame. But you can see here, very strong bearish engulfing candle closing below the lows here, looking way more bearish. And there's a lot of buying underneath here. So there's going to be a lot of buying pressure, pushing it back up and pushing back on those short moves. The NASDAQ's not even that overextended. You can see that exhaustion coming in here on the monthly. So let me show you that monthly chart. You can see it just kind of running out of steam here. Really wouldn't take much for that NASDAQ to have a bit of a breather. Just to come back down towards 20,000. I mean, even as far as 19,000 would be more than enough for it to recoup some of the energy that it spent. It has been overdue when normally we would have had a bearish September. We didn't have that. We had an extended run, and therefore we're running on extra stuff now. So we need to have a bit of a correction there, guys. And so it doesn't have to be a big one, but it looks as though at this time, it looks like it's on the monthly, but you can see the buyers coming in here. They're going to keep propping it up. So I'm expecting at some point to get a nice, strong, bullish weekly candle, and we'll see where we go from there. But we have been overdue for one, and it looks as though we're finally getting it. It's a good thing. You can see the Russell now almost back within its range, so let me extend that original range thing. I'd be surprised if we go back into that, if we are in a bull market, which, you know, we just came out of a bear market in 23 or the end of 22. I expect us now to be able to have a good run to the upside. So sort of February, March 23 is when the bull market started. Unless we get a black swan or maybe a gray swan event that disrupts the current bull market, I believe that this is just a natural, normal, healthy pullback at this time. There's nothing to point to anything other than that, obviously other than the general craziness that is just standard out there. And it's January and already people are just sick of it. So this is where it gets interesting. Let's have a look at Bitcoin. It makes sense to me that Bitcoin might also then experience a subsequent correction to the downside. We're seeing some signs of exhaustion here. We could see a bit of a correction down towards 80,000, maybe even as far as 71,000. Could happen if there's panic. We could see that happening. A lot of people are obviously wanting to take profit right now, so they will potentially take some profit, which could accelerate a bit of a deeper correction here. So this week, I think what's worthwhile watching to see if we break through and close below this 90,000 level. That would be, to me, the signal that we're going to have that much deeper correction. But as I said, for me, the target would be 80,000, somewhere around to 80 to 71,000 at this time. Ethereum already taking a bit of a hit, a bit of a double top pattern here. But again, not much is required for this to come back to true value, in my opinion. Down towards that 2,600 would be more than sufficient. So to me, I'm not really saying that. I am saying that the markets are overdue for a correction, but they don't look extremely stretched, in my opinion. Just slightly more than normal, and therefore it's kind of like a Christmas thing. They've had too much to eat. They really need to just kind of trim it back down. So let's have a look at some of the big ones. Let's look at the Magnificent Seven. Apple is already right in a good place. It's back at the previous highs. This would be interesting to me if we would really get a bit of a bullish candle here. However, if we were going to see a monthly correction, we could even come back down as far as 200. So I'm really looking at a range here, whether we get a shallow retracement on the monthly, which would be over the next one or, let's call it next 4 to 8 weeks, or whether we're going to get a very shallow one or a much deeper one. All right, the deeper one for me, if it comes back down to the old highs, is a good thing. It sets us up for a nice, longer, extended bull run. We've got Microsoft. So Microsoft definitely stumbling a little bit over here at this key level. It's also starting to breach through its wedge. And so again, this week, I would expect moves to the downside here. But, it's not overvalued in that sense. Correction down towards 300 would be a good thing. You know what I mean in terms of a discount of the price. But this is not looking overstretched. Amazon, a little bit further away from its values, did do a breakout and a retest, so this also looks good. So for me, Amazon down to 200 would be a really sweet spot and a very natural kind of a correction point for this to pull back to. Okay, so I'll just mark this now. That's kind of what my expectation would be. If we get that, we could see some signs of exhaustion definitely fitting in here. The thing with the bull market is that it really takes a while for it to actually let go. It really has a lot of buyers getting in, and so it sort of treads water for a while before it eventually drops, and then when it does, it can be quite big. But what I'm seeing now is certainly signs or a bigger breaches than I've seen in the past. Google doesn't look that bad. In fact, we don't even have bearish divergence here at this time, at this key level. So certainly it's a level of resistance, and potentially we could just see a ping pong around these levels here. The weekly looking signs of exhaustion, but a pullback down towards 180 makes a lot of sense as well. Meta. Now, Meta is in a slightly different place from a monthly perspective. It's had exhaustion kicking in since almost a year ago. Lots of it in here. This has kind of been, it's already been on an extended run here. Hasn't really connected with the simple 10 moving average going all the way back to, wow, holy cow, going back to March 2023. So this is definitely due for a deeper correction. I would say this one would benefit from a correction down towards 400. But even if it just corrected down to the 500 level, that would be considered healthy. But it's running out of steam here. Not showing as much weakness as some of the others here, but we've got definite bearish divergence. We've got price doing smaller and smaller moves, producing sort of shallower highs. It's turning over, but again, this could be a couple of months in the making, and a correction down towards that 50-period moving average would also put it around that 50 mark. So although Meta is incredibly strong at the moment, there's just been signs of it. This is really needs to take a breather. It really is due for a correction. Now, NVIDIA's been running out of steam. Look at that on a monthly time frame. Look at that exhaustion over there. Sorry, look at the battle that's been going on. Just not enough buying above here. What's really happening is there's just not enough appetite for it above that. There's plenty below it. We can see the bulls supporting it here. We could just see there's not enough for it to really close much higher. And so this one is struggling. Let's just put in that level there as well. So let's kind of mark this in at 139, 140. So this could benefit again from a correction, I would say possibly down towards that sort of 100 mark would be very good for it to take, let off a little bit there. It's almost a bit of a double top with clear bearish divergence. In fact, it's multiple bearish divergences. It's been producing fresh highs and it just keeps sort of trending lower. So this is due for a correction, I would say. And again, I think for it to come down to that 100 mark would be a relatively decent place for it to come back to. And Tesla, the last one on my Magnificent 7 list, is showing just currently pullback into the moving averages. So on the weekly here, it's saying to me, listen, this 350 mark is looking relatively healthy for me. When you look at it on a month, you get a slightly different picture. It's very much overextended away from the moving averages, had a big spike up as it's had in the past. And usually when it's had that big spike up, it's had a bigger correction. So, it is possible. I don't think it's outside the realm of possibility that a correction down towards 300 could happen if we see the correction in all of the other markets. In other words, if this definitely becomes a market-wide correction, no doubt about that, I think we'd see ourselves coming back down towards this 50-period moving average. So we could even come as low as sort of 250, but I think 300 makes a lot of sense, somewhere between that sort of 280 and 300 area where it can find some support before potentially then continuing on. But you know what? It's not like, we've got some longer term sort of divergence, but shorter term or medium term doesn't look that bad. It just is. This was an insanely big move where it almost effectively doubled in price within a couple of months, which when you stop and think about that is a little bit insane. It's a lot of energy expended, and therefore a correction to the downside would be a much needed kind of break for it to have. So that puts it in at around about that 300 mark, which makes a lot of sense if that's going to be the case. So to wrap up, to conclude here, we saw that dollar continue to strengthen, but I'm seeing some definite signs of slowing down without a doubt now. I don't think I'm imagining that. Then we can see crude, oil, and gold have broken outside of their ranges a little bit. The indices, as well as cryptos and stocks that have had a really good run, are almost certainly starting to turn back on themselves a little bit here. So there's definitely something different on the horizon now. Whether this is the first of a few attempts to turn around, that is a possibility, but actually it would just be better for the markets to just stop and take a breather. So that is, and also what's interesting is seasonally, this isn't really the time of year we do it. Often the run up to April can be incredibly bullish. So we didn't really have, what we did is we didn't really have a negative September last year. I don't count it as that. We just continued straight through. So it's very possible that burning that extra fuel, burning that extra energy across all of the asset classes is sort of coming home to roost now. We're going to see that market finally take a bit of a breather. A little bit of too much tequila in the punch bowl, and we're going to see if that's going to be the case. One of the clues, by the way, is when you employ the tools in the market, such as rate cuts or rate hikes, and the market responds the opposite way you would expect it to. So in other words, the market's already overheated, and then you add a rate cut, and which is actually meant to be there to kind of juice up the market, and instead the market starts to stumble. So that's when everything is out of sync. That's actually where the market is already in the wrong place. And so we're definitely in one of those areas now. The question is just, are we going to get a nice calm down, healthy pullback, and then back to business? Or is this going to be one of those things where the market continues to go? And I would say at this time on the record that if we continue to keep going from where we are now without taking a break, then we're definitely in bubble territory. And that bubble territory can obviously go on for a year or two or whatever, but then we are absolutely in it, and then caution suddenly is definitely on the table. There we go. I'm going to leave you with that. Let's see how the next week plays out, guys. We're past NFP. That's the big one. Just remember to keep calm and carry on trading, and stay away from those volatile markets, and just stay sensible with regards to risk management. Thank you very much. Have a good one. Oh, by the way, one last little bit of a note, by the way, if you are connecting with me on LinkedIn, just going to say to you, my apologies, I'm not really a LinkedIn person. I just post these videos on LinkedIn, and then I move on, and I get a lot of requests for connection, so I'm not ignoring you. It's just that I just don't get onto LinkedIn very often. Okay, so just letting you know, I'm not ignoring you. I usually get about 50 a week, and that's just too much for me to kind of respond, and so I normally don't. But very much, I'll just add your connection, but I often don't respond to messages. So just letting you know, don't take it personally. And also, thank you, by the way, to my subscribers and followers. You are always very much appreciated, and you're a good bunch of people. So thank you. Have a good one.